Imagine your desk on a quiet Wednesday afternoon before the long weekend. You see an email from co-counsel about the six-figure settlement you have been hammering out for months. The firm feels settled and secure because you signed your cyber insurance renewal premium earlier that morning. You opened the attachment to review wire instructions for the payout. Everything looks official with the right logos and the signature block you have seen a dozen times. You forward it to your office manager to get the wire processed before the bank closes. You do not notice that the email never hit your sent folder because a silent rule moved it to a hidden archive immediately. By Monday morning, the $200,000 settlement is sitting in a fractional bank account in another state. Your insurance provider informs you that because you technically authorized the transfer, the claim might not be covered. The silence in your office becomes heavy as you realize the money is gone and the client is still waiting for their check. The mistake is thinking your cyber insurance policy is a replacement for a defense plan. You will learn how to spot the silent inbox rules that redirect your cash before you even know you are compromised. This quick check keeps your renewals low and your settlements safe. Navigating these shark-infested cyber waters makes you realize that being a top-tier attorney doesn't automatically give you the expertise to satisfy a picky insurance carrier. Discovering that your IT person is just as overwhelmed by the techie language as you are was a frustrating wake-up call. You just want honest guidance in plain English, so your protection finally works quietly in the background. I'm Kevin, founder of Sentree Systems. Since 1999, I've seen cybersecurity threats evolve, impacting law firms' operations and trust dramatically. Most business owners look at their insurance renewal like a deadbolt on the front door. You turn the key, check the box, and assume the house is safe. But modern intruders are not just looking to kick in the door and demand a ransom. They want to find an unlocked back door or a window left cracked open so they can hide in the crawl space and watch how you move. They stay quiet, learning exactly how you talk to your family and the people you do business with. In 2025, a small Texas law firm found out how expensive a hidden intruder can be when a single attack cost them $515,000 in total expenses. They had their locks in place, but that $175,000 ransom was only the start of the bleeding. It is easy to get overwhelmed by techie language and complex alarms, so we end up lowering our guard and trusting the name on the screen more than the security process behind it. To keep the house truly secure, I use a simple rule called the voice-to-bank filter for every single routing change. If the instructions change on a screen, you must hear a familiar voice on a known phone number before any money moves out the door. Take a partner named William, who runs a personal injury firm with 12 attorneys. He is in a deposition when he sees their largest settlement is ready for disbursement. He needs the client paid fast to maintain his reputation. An email arrives from opposing counsel with updated bank details. Late for a session, William forwards it to his bookkeeper. An attacker had been lurking in the inbox, using silent rules to swap routing numbers. The bookkeeper sends the funds to the wrong account. 3 days later, the real counsel calls. William finds his insurance has a massive deductible and an exclusion for voluntary transfers. The $340,000 forensics bill now ruins his focus and staff morale. This is where the usual instincts get people in trouble because speed was prioritized over a phone call. Insurance is the ambulance that picks you up after the crash, but it does not stop you from driving off the cliff. It helps with the cleanup, but it cannot prevent the wreck or protect your stability. That kind of internal breakdown is exactly why I get the calls I do. The call came in at 7 a.m. on a Tuesday from a partner I have known for years. He sounded like he had not slept in 3 days and kept repeating that they had the best insurance money could buy. I could hear the panic in his breathing as he tried to convince himself that a policy was going to save the business from what was happening. I asked him to log into his admin panel while we were on the phone, and his voice cracked when he saw the list of active mail rules. We were looking at a series of instructions tucked away in the settings that he never even knew existed. Every email containing the words wire or settlement or routing was being sent to a folder named RSS feeds that no one ever checked. He was watching his firm's profit for the entire quarter get diverted to an account in a different time zone. The attacker had been a silent participant in every settlement negotiation for 6 weeks. They were reading every thread, learning the tone of the conversations, and waiting for the exact moment to swap the bank details. It was a slow-motion disaster that had been in motion long before anyone saw it. By the time the first missing payment was flagged, the trap had been set and triggered over a dozen times. I told him the hard truth that insurance companies are tightening the screws, and they do not pay out for avoidable process gaps. He put the phone on speaker, and I could hear the silence of a room full of people who realized their tech had betrayed them. It was that heavy, hollow feeling of realizing your entire workflow was built on a foundation of sand. We spent the next 48 hours killing the rules and forcing password resets across the entire domain. It was a grueling process of scrubbing every corner of their digital office to make sure the door was actually locked. We saved the next 3 transfers, but the first one was already halfway around the world and completely unrecoverable. In 26 years, I have seen this same ghost in the machine at law firms and title companies and architecture shops. The pattern is always the same. They trust the inbox and ignore the lack of a 2-person verification rule. The firms that survive these years without a loss are the ones that stop assuming the insurance company is their security team. They adopt the voice-to-bank filter and stop treating a screen as a source of truth. If you could rethink one thing today, it is the dangerous belief that cyber risks are someone else's problem. Before renewing your cyber insurance, remember that neglecting your business's cybersecurity can lead to devastating financial and reputational consequences. If you want to run a baseline security assessment on your own business to see where your defenses are vulnerable, click the link in the description below to execute our 10-minute cyber health audit. Let's protect your client files and your reputation before tomorrow morning.